Hey guys, I just wanted to throw together a really quick video to try and explain and give you some context as to why the stock market was making such big and bold moves yesterday, and you probably saw this reflected in your own portfolio as well. My portfolio had a very, very good day yesterday, largely caused by my two biggest holdings, Palantir and Tesla. But also my other growth holdings, Amazon and Alphabet, had very, very nice days as well. But this was kind of across the board with growth stocks in general. Nvidia, Meta, Apple, just to name a few, all had fantastic days. So I'm going to explain the macroeconomic reasonings as to why this was happening yesterday, but also some company specific reasons as to why particular stocks were moving more than others. So what I want to say first before we jump into all of that is that realistically, this all doesn't matter. Short-term movements in the market are not going to matter in years and decades to come. If you start caring too much about one-day price movements, then you start getting into the mind frame of a trader rather than a long-term investor. So instead, I just try to view it as a nice to see. You know, it's nice to see my portfolio do well yesterday. It was nice to see Tesla go up by X percentage yesterday. You know, it feels good. But I try to also realize that if I'm going to hold growth stocks like Tesla, like Palantir, then I should expect real short-term volatility. I'm kind of signing up to it with growth stocks. So it's important to stay level-headed and emotionless when this happens. Either way, right? Because if you see a big swing upwards, you need to not get too excited. If you see a stock drop by 5% in a given day, you need to try not to get too sad. Because as soon as you let your emotions creep in, you could be at risk of letting your emotions dictate your investing moves. And that's not really where you want to be as an investor. You instead want to have a strategy and a plan, and you want to execute on that rather than, you know, one day feeling like this and then making this move, and then the next day you suddenly feel like this and you make this move, because that's not how you compound returns in the stock market over the long term. If you see that your Tesla stock is up by 5% today and you let your emotions play into it and you start getting really pumped and really excited, you may then actually decide to put all of your emergency funds into Tesla stock. That obviously may not end well for you. You also may decide to sell out of all your other positions that actually you do have quite strong conviction for in order to go all in on one stock that's doing well today, because again, you get too excited. And then on the flip side, you might see that Tesla is down by 5%. And you may start hearing lots of, worrying news. There's always news about this stock, lots of market noise. And you may start really getting fearful and worrying. And that may lead you to sell out of your Tesla position completely because you're worried it's going to go to zero. And then in a few months' time, you may look back and realize that this was just short-term volatility coupled with market noise, and you actually made a mistake. So it's important instead to focus on remaining as rational and logical as you possibly can. And it's a learning curve for all of us. It really is. It's really hard not to get excited or worried, depending on what your stocks are doing. I just try and research as much as possible and really try to understand what the company is doing rather than what the stock is doing. Because at the end of the day, by investing into a particular stock, you are buying a piece of a company. So I try to stay up to date as to what that company is doing. And I try to always question myself, does this position still have a place in my portfolio? Am I still aligned with what they are doing as a company? Have they made massive shifts that I now feel uncomfortable about? Or actually, are they working towards things that I really feel that have, a strong potential for the future? That could be really good catalysts, because it's the intrinsic value of a company that you want to focus on, and then eventually the stock price will catch up and align to that. So like I said, some of these positions had company specific reasons as to why they were increasing, but all of these were also affected by the macroeconomic reasons. So we'll get to the macro in a minute. Let's just talk about two stocks that I see had particular company specific reasons as well. But if there are any others that you want to explain, leave them in the comments below. So firstly, Apple. Yesterday, they announced that they would have an event on the 12th of September, and this event is expected to be the release of their iPhone 15. Of course, that may have moved the stock a little bit yesterday. But honestly, I think it's probably going to move the stock more as we edge closer to that day and following that day. But no one knows what's going to happen. Like I said, it really doesn't matter in the short term. If you believe Apple is a great company, then just dollar cost average in, maybe reserve some on the side so you can invest more if it dips, and just don't worry too much. But yeah, that happened, so that could be having an impact. Also, Tesla. Tesla was the largest mover yesterday, I believe. It definitely was in my own portfolio. Tesla stock had a phenomenal day. Now, on Friday, Elon Musk actually live streamed on X, and he live streamed himself demonstrating FSD version 12 beta. So he was in a Tesla, but he wasn't really driving, the car was driving itself, and he was filming what the car was doing in reaction to different road situations. Now, I believe this really marked a point in time that people had a shift in their mindset about FSD. It's been promised for a long time and it's not been delivered. And a lot of people really didn't believe that FSD would ever happen. It wasn't safe enough, it wasn't good enough, and especially wasn't going to happen anytime soon. But now we're really starting to see that one, it's good. It's really good, it's really impressive. And two, it's really quite advanced and it's going to get better and better and better very quickly, very soon, which we'll talk about in just a second. So this obviously makes people bullish and may have made people put more money into Tesla stock. Alongside this, we also had the announcement that Tesla were activating 10,000 NVIDIA H100 GPUs, graphic processing units. Alongside this, we also had the announcement that Dojo, Tesla's custom supercomputer, was going online. These two things, the NVIDIA GPUs and Tesla's Dojo at the same time, coupled together, is expected to really exponentially progress FSD. And I believe this made people start seeing that Tesla is a serious contender as a real world AI leader. I made a whole video about this topic just the other day, so I'll link that up here if you do want to watch that one. But now let's talk about the macroeconomic reasonings. So yesterday we had JOLTS come out, and that stands for the Job Openings and Labour Turnover Survey. And that basically showed that there is a decline in job openings. And the job openings actually slipped below the 9 million mark for the first time since March 2021. Now it's still above the pre-pandemic level, but it does show the signs that the labour market is actually cooling off. The report also, alongside this, showed a decline in the quits rate, which basically suggests that workers are less likely to quit their jobs. So they are less likely to intentionally resign and leave a position. So now let me explain as simply as possible as to why this is impacting the stock market and how this may be able to explain the big moves that you were seeing in your portfolio yesterday. So the whole idea is that this data basically signals and indicates to the Feds that the labour market is cooling off. And this could mean that they actually decide not to increase interest rates any further, and they actually decide to pause them at current levels. This then improves the overall market sentiment, and investors start putting money back into the stock market. We know that if we're in a high interest rate environment, investors tend to take money out of the stock market and put it into bonds with high yields, saving accounts and things like that. Whereas if it's the other way around and the interest rates are down, obviously we've just said that this data might actually cause the Fed to pause interest rates so they're not going up, then investors are more likely to actually not have their money in bonds because the yields go down and saving accounts for the same reason, and actually put more money back into the stock market. Now, it's a little bit odd how this all works. It doesn't really make sense. There's a saying like bad news for good news, or I can't remember what it is. Someone please let me know what that saying is in the comments below. But it's a little bit odd how it works, but it's really important to understand how interest rates impact the stock market and how overall sentiment impacts the stock market, so on and so forth. Now, this information isn't really making me make any large moves in my portfolio. I am just going to continue to regularly buy new shares of the positions that I have the strongest conviction for. Like I've said time and time again, I'm just trying to remain as emotionless and level-headed as I possibly can. My strategy has always been to buy in at regular time periods, but then keep some money on the side in case a position that I have strong conviction for starts dropping by a significant amount, and I'll just use that opportunity to buy more shares at a discounted price. If you want to add to this conversation, or you've got a thought here that you want to share with people, leave it in the comments below, and come and follow me actually over on X. I'm posting on there every single day, multiple times a day actually. I hope this video brought value to at least one person watching. Thank you for watching, and I'll see you in another one very soon.